which should be good fun. Is it working?
Yep.
Can you get them into? That's what we're going to do at the end. Oh no, just staple them. There's I think it's 4. Yeah, it's 4 sheets. All right, let's get started. So accounting, we're going to look. We've been looking at laws, general laws. We're now going to look at sort of more the finance accounting laws, which to a large extent, deal with the ATO. Interesting, the ATO is not like, and I know a lot of you are very concerned about, tax law, and oh my God, we're going to go to jail if we don't pay something, or we're going to get hit with these millions of dollars of fine. The tax office of recent years, and I'm saying the last 10 years, have taken less of an audit penalty approach, and more of a customer service approach. So you actually, and rightly so, you are now their customers because you pay them all this tax. So they start to treat you like a customer. And so they start to treat you as someone that needs help to do things and to comply with stuff and all this sort of stuff. So the Australian Tax Office has become much, is that a thunderstorm? The Australian Tax Office is now becoming much more approachable because they understand that they get more value by treating us as human beings and customers rather than as potential people to send to jail. So in other words, take advantage of it. Take advantage of it, which means if you've got a problem, give them a ring. Get on the phone and say, I don't understand this, how can you, and you'll find the people on the other end are there to help you. The other interesting thing is that if you can't pay your tax bill, give them a call. Yeah? Instead of hiding and scheming and doing whatever you're going to do, you just ring them up and say, I'm a small business, I've got a tax problem, I can't pay my bill at the moment, and you'll be surprised how they will enter into agreements that say, okay, well, what can you pay? How can you repay the rest? You enter into an agreement and you pay that tax bill off. Obviously, they say, how are you going to make sure this doesn't happen again? You say, I'm going to put money aside and then I will be okay. But don't go sitting there being stressed out that the tax is you've got a problem with tax in understanding it, or you've got even a problem with paying it. They are people that will work with you because obviously you're not going anywhere, you're an Australian citizen. You're going to pay them a lot of tax if you haven't already. And so they're going to work with you and help you work through your problem. What do they gain by closing you down because of a tax bill? What's the point? Because that means for them next year they're not going to get any revenue out of that business, whereas they could get good revenue if you're successful in the following year. So that's just an underpinning one. So number one in this whole game is get a good accountant. And someone says, what do you mean, Pete, a good accountant? Is that a big four? Is that going and getting Coopers and Lybrand, or someone like this is Ernst & Young? Is that what you mean by a good accountant? Yes, they are extremely good accountants. There's no problem with that. The only trouble is they deal mostly with the big businesses, the BHPs and the big corporates. So then you say, oh, well, I've got a brother-in-law that's got an accounting practice out there in the suburbs, maybe I could go and use him. Maybe not a good accountant for you. Cheapest, definitely the cheapest, but probably not the best value, if you understand. The trouble with a suburban accountant is that they make their money out of volume. They don't make their money out of going into any depth anywhere. They just want to pump BAS statements, BAS reports through. They just want to do income tax returns. They want to get their money out of volume, and they just have this process. In terms of, can you give us some advice, they're really not that skilled at it. They don't spend a lot of time reading things to come up with that. They're more about a compliance-based industry. So be careful about getting a cheap suburban accountant who's going to help you. Their business model is not designed really to help you in establishing a small business. What I've always found is the mid-tier one is by far the best. And when I say mid-tier, if I was to sort of give you a model, it's probably they've got 3 partners, 15 staff, that sort of thing. It's around that sort of size. They don't have to be in the city, they can be in the suburbs, but it's a practice that has people that can spend time getting into depth, because one bit of advice from them can save you $10,000. You go and get advice from someone that's in the game all day and reads every single thing that comes out of the tax department. And they can give you one bit of advice that can save you $10,000 for the sake of $150 in an hour's, or $300 in an hour's worth of engagement. Accountants are one people that I've always found I got return on investment massively. I never got that feeling about a lot of other professions. I'm not going to list them off because I'm on TV. But the accounting profession is one that when I paid a bill, I actually thought, you know what, I actually made more money than what I'm paying. I've either been saved a lot of money because of that, or I've made more money because of that.
So do you recommend going to franchisees or individually owned tax agencies?
Well, no, I'd be one up on that. I would be going to choose to go to that mid-tier, where you're going to a place that has, probably at least three partners, and, there are 10, 15 staff. It's about, they won't be franchise businesses. Most franchise businesses deal with one or two partners in a suburban shopping strip. These are well, they're called mid-tier accounting firms. So, look, I think I've got my best value out of going with those sorts of firms, and that's because when you need advice, the partner that you're dealing with might say, look, just wait a minute, Ben, he's specialised in that. Let's get him in to answer that question. And when they answer the question, they're in it. They're steeped in it. They understand that particular part. So get a good accountant, and if you've got a good accountant, most of the rest of this stuff just goes away. But we're going to delve a little bit deeper because I think you guys, it's good to have some understanding of the whole thing. So we need them because of obviously those major things. You've got to do income tax every year. You've got to do GST. You've got to add that to your products. bank account, put it through your credit cards and pay that. Because at the end of the year, you can get yourself a world trip just from paying your bills through a credit card rather than through just out of your direct debit to your account and such. But also, it's a really wonderful place to keep records. You know, your credit card details and your business bank accounts are really good places to keep business records, obviously. Yeah, and then the audit's not guaranteed. They think they get round to everyone once every 5 years. I've only had one in all my years of business. Only once did someone come in and say, "I want to look at your books." I went, okay, there you go. And I think I was a very new business, and I think they felt that they should be lending me money rather than me paying it, because at that stage it wasn't going so well. But yeah, so they do. Well, like I say, they're not running this heavy audit, heavy penalty approach. They're more saying, look, we'll make it as easy as possible. We'll work with you. Understand you've got to pay your taxes, and most people generally just see it as an expense, like they do their rent, like they do their lighting, electrical, they pay their tax. So, but you've still got to, in the case of an audit, you've still got to have everything there and ready to go. All right, so let's get into a little bit of finance and accounting, and I am going to dig down a little bit into accounting, but hey, you know, you might as well, that's going to be our booklet that we're going to do afterwards. There's two big aspects to accounting, and I understand you guys switching off tonight and saying, look, Pete, I'm just going to employ an accountant to do all my work. Now, that's fair enough on this side. This side is financial accounting. Accountants are the world's best people at doing this side of the equation, which is recording the past, preparing financial statements, following strict standards, and dealing with the ATO and people like that. Accountants deal with what they call financial accounting. And I'm all for outsourcing that, you know, no trouble at all. The part that we can't outsource is managerial accounting. Managerial accounting is all about predicting the future. We need to be heavily involved in predicting the future. You know, someone asked me once, you know, what do you think is the #1 skill that you could have? I said, oh, that's simple, just predict the future. You know, it really is. And you know what? As business people, that's what actually we try and do. You guys are actually trying to predict that you're going to go and do this business and it's going to be successful. You know, you're predicting the future, and when you get good at it, you actually can get good at seeing how something should go to be successful. So you actually, you know, you know, people, I'm going to say people like me, are not gamblers. I don't gamble. I can't gamble. I'm just not. It doesn't even interest me. And I was thinking the other day, why doesn't gambling interest me? Why don't I get involved in it? And it's because instead of trying to predict the future, I create it. You know, I try and actually manufacture the future, not predict it. You know, I actually try and shape the future. So I'm more interested in how can I shape the future rather than guess an outcome. And that's why I say managerial accounting is a big part of your business skill set. So because you want to be able to predict the future, you need to be able to create budgets. My God, you guys have got to create cash flow budgets. You've got to understand how to do that. You can't be outsourcing that stuff. You need to be good at mail, Excel, and you know, us as people. It's user determined. We don't have to stick with we don't have to have set financial reporting. We just do the reports or shape the reports so that they give us the information we need, because it's really just designed for internal stakeholders. That's the part we can't outsource. And that's the part we're going to do in the next couple of weeks. We're going to be spending a lot of time in managerial accounting, not in financial accounting. I'm not going to teach you debits and credits. I'm going to mention it twice tonight, and then we'll never talk about it again, because that's financial accounting. What I want to talk to you about is cash flow budgeting, CapEx budgeting, profit and loss budgeting. I want to talk to you about that because that's they're your control mechanisms. They're the things that help you predict the future. So you're here. You're stuck between these two places. We're going to be spending most of our time on the right-hand side, but we also, tonight, we're going to delve into here just to understand it a little bit. Why do we need accounting? Well, these are the main reasons. We have to do accounting because, one, compliance. The government makes us. The government makes us do income tax returns every year for our business, and even if it's a sole trading business, you still need to say how much money you made in that sole trading business because the government wants to tax you for it. So there's compliance. It's the law. If you're going to get funding, good luck trying to get funding without any financial statements without any accounting. You go in and say, hey, you can trust me. Hey, I build things. So yeah, well, where's the financial reports? If you haven't got financial reports, you're not going to get funding. That's just how it is. If you're going to judge the financial performance of your business, what your gross profit margin is, what your net profit margin is, what your wages are as a percentage of turnover, all of these things, what are your variable costs, all of these things, if you're going to know the financial performance of your business, you need to be keeping good accounting records. If you're going to budget and control your business, you need to understand accounting. And if you want to compare your business with other businesses, if you come along and tell me what gross profit rate you've got, I can tell you, I can look up, go to the association, I can find out whether that gross profit rate is the average of the industry, above average or below average. Terms pretty much, and the same systems that were invented 500 years ago. It's a pretty amazing, I don't know what the guy did to be able to come up with something that has lasted the test of time. And that's the thing he came up with, is what we call the double entry bookkeeping, which is that debits and credits stuff. And if you've ever faced debits and credits like I have, it's just nearly impossible to understand. And about 5 years ago, I made it my mission in life, before I figure out the meaning to life, I thought, before I do that, I'm going to find the meaning to debits and credits. And I have been working on the meaning to debits and credit for the last 5 years, trying to actually understand it, And someone picked I did answer it on Quora the other day, and someone picked it up and posted it to one of his things, which was completely irrelevant information. That was his post, completely, and that's where he posted it. My 5 years of my work, he just put it in completely irrelevant information. But for some people are obsessed like me, trying to understand I'm actually trying to understand what he saw. I'm trying to look at it from first principles. What did he see, and how did he come up with this crazy system that we're still using today? All right, purpose of accounting. It's a management information system, basically. Those of you that have got management information systems at your work, that's what accounting is. And it does these things really well. First of all, it records transactions that happen every day. Financial transactions are happening every day. It's a great system for recording that. It's a great way of communicating to other people. It's very hard to communicate. So, oh, we're doing really well. How well? Good, really. Huge, this big. Accounting allows us to quantify that. It helps us with decision making and control. You know, you can actually do an analysis to say which is the better. We could go this way or that way. We can actually make those decisions. We can actually see which asset is performing for us, which ones aren't. And it helps us with our planning and budgeting. Without accounting, we can't do any sort of planning or budgeting. And then finally, the other thing that the purpose is to comply with statutory authorities. And we've only talked about the tax office, but there are a lot of organisations that require accounting as part of their compliance. Stock exchanges, you can't be a public company on the stock exchange without listing quarterly or half-yearly results. So, you know, accounting is incredibly important for public companies who must report every quarter. Tax laws, we know. Corporate regulations, you know, there's a lot about corporate regulations that require you to publish accounting information. Industrial relations, you know, they're always looking at it. If an organisation is making a fortune but making it at the expense of their workers and not passing it on to their workers, not real good. And environmental assessments are also an area that gets another reason why we need to have accounting. So lots of purposes of accounting, and we'll give ourselves a break here and there because this is pretty long. Accounting is also the language of business, and that's why most of my students will say, Pete, everything you're going on about, I'm just going to outsource to my accountant. It doesn't work that way. You can't just say, I'm going to do all of this and not do that part. Remember, as business people, or particularly as startup business people, we actually have to be across every field. You can't say, I'll do this part and I won't do that part. We actually have to have a reasonable depth of understanding across every field. And because accounting is this language, every funder you meet, every investor you meet, every interested party are all going to speak this particular finance and accounting language. They're going to talk this language, and if you can't at least understand what they're saying, you've got no chance of attracting these people. And at some point in your career, you're going to need to get a funder, an investor, interested parties. You're going to need to get them, and so if you can't talk that language, then you're going to struggle. So we need to learn this language of the business. Now, what I've done is I've created a glossary of financial and accounting terms, which I'll put up online. And the reason I created this is because in 500 years, we've got 4 or 5 names, different names for the same thing. Over the years, people have changed the name of something. And as new people to accounting, you say, is this another report? You know, is the income statement? Okay, I got that. I know what an income statement is. What about the profit and loss statement? Oh, is that another one? No, it's actually the same. What about the statement of financial performance? Is that a new one? No, that's actually the same. What about a P&L? Oh, no, that's still the same. You know, what happens is that there's all these different names, but they actually refer to the same thing. So I've actually created a thing that I'll keep for you, because if you ever come across a term and you say, what do they mean by that? You can look it up and say, oh, is that what it means, you know? And I found it very beneficial for my students that they understood that there was a, also known as in accounting and financial terms, because in 500 years that's what happened. We've created all these different names for the same thing. All right, a couple of accounting conventions. There's a lot of stuff here, but I'm only putting it here because I'm going to give you a workbook at the end, and this information is important for me. There's a couple of, you know, accounting is not a strict set of rules as such. There are accounting standards that are quite strict, but there's some underlying conventions or some assumptions that go on in accounting, and here's a few of them that are pretty key. First of all, that every financial transaction has a dual aspect, and it's simply described as this: if I lend you money, then you must. If I lend you money, then you must lend me money of the same amount. So you can see how at that transaction, it's not just one transaction. It's not just, oh, I lend you money. That's only half the story. The other half of the story is now you owe that money back to me. So that dual aspect is all the way through the finance system because it's a closed system. It's not a system that, you know, money doesn't get created or destroyed, except in America where they print billions of dollars every day. But in the sense that whenever transactions take place, there's two accounts, or there's two aspects that are affected. Yeah, if you sell stock, yeah, that's true, you've made a sale, but also your stock's gone, hasn't it? So there's two things that are happening. It's not just a sale being made, but your stock has been reduced. So just got to understand that there is always a dual aspect to every financial transaction. Matching principle. The matching principle is simply that you try and match the expenses in the month that the revenue is earned. You don't want revenue coming in 1 month and expenses in another month, because you're going to get a bad report. You're going to be going broke in November because that's where all your expenses went, and then you're making a fortune in December because your expenses aren't matched in December with your revenue. So what we try and do in accounting is we try and match the revenue with the accounting. Sorry, do that again. We try and match the revenue with the expense, and that's called matching principle. That's called accrual accounting. If anyone wants to understand what accrual accounting is. Objectivity. You can't just make things up in accounting. You can't say, but my brand, my personal brand is worth a fortune. Let's put it in the books, $100 million. That's what my personal brand is. If you didn't actually pay $100 million for that brand, then it's worthless in accounting terms. You know, that's why when you buy land for $10,000, it's still on the books in your business at $10,000. Sales you made, what were all the expenses incurred in earning that sales? That's what matching principle is, and it's also accrual accounting. And remember I said to you there's a compromise called cash accounting. That's the one that you just record it when it happens. And that's the one we're allowed to do. It's not proper accounting, but it's the one we're allowed to do because we can't afford to all have an accountant matching our accounts every month, which virtually accrual accounting requires. Accrual accounting requires at the end of every month to move expenses across and revenue back, and it's too complicated. It gives wonderful reports, but the trouble is it just becomes too costly. And at the end of the day,
a little bit like sort of bullshitting a little bit. No, because you're saying like you're buying stuff over here but not selling it till here. But at the end of the year, doesn't it all sort of?
Yeah. If you looked at it from a yearly point of view, you don't have to worry too much. Yeah. If you're doing yearly reports, then most of it there's a little bit of adjustment in 30th of June. But if you were doing monthly reports and you were relying on that to tell you how your business was trading, you would have to do this sort of work.
So again, more for the big business.
Yes.
Yeah.
Yes. Us, we don't need to do it, but it's just something that you need to be aware of. I'll finish on this and we'll have a break and then I'll go on to the next thing. So often you hear the word bookkeeper and you hear the word accountant and you wonder, is this the same animal? Well, they're not really. A bookkeeper is a role that's been developed that deals with most of the clerical work of accounting. Most of the recording, task-orientated, daily recording of financial transactions. They classify transactions. They're the people that sort of say, oh, this is an asset, this is an expense, this is an income. They classify the transactions, and they really take it up to the point that everything's in, and a trial balance just makes sure that everything in the books balances. That's where they stop. They then usually hand it over to an accountant, who's usually a highly qualified person, usually a member of a CPA or CA, which is Certified Practicing Accountant, or a Chartered Accountant. They're the two qualified bodies in Australia. And these people deal with the big picture. They'll deal with your structure. A bookkeeper's no good to go and ask them about trusts and companies. That's an accounting big picture. They're results orientated. They're not really interested. They don't really want to get down into nitty-gritty of recording your stuff. That's the last thing accountants should be paid to do. And they hate the fact that you come up with their shoebox of stuff, because really that's not value for money for them. They know that they can't charge $300 an hour for doing that sort of work. You take up an hour of their time, but really there's no value for you or for them. So I want to talk to you a little bit later about how we can get around that. They want to be involved in interpreting your stuff and saying what you should be doing, you know, how you should be structuring your finance or whatever. They want to do the reporting to government. Usually they're very good because they have an intimate relationship with governments. They actually are so intimately related that they actually are tax agents. Pretty scary, isn't it? You're talking to your accountant, yeah? You're paying your accountant to give you advice. Yeah, you got that? They actually are a tax agent for the government. Yeah, so they actually work, you know, there's a word for that in legal terms, conflict of interest. They actually have that conflict of interest because on one hand, they act as agents for the government to collect tax, basically, and they also act as your representative, you see. So that's why an accountant will never tell you, if you ask them, say, yeah, come on, wink, wink, nudge, nudge, how about what do we do, you know? The accountant actually can't say anything because they actually, that goes against their stuff over tax agent. So if you're looking to get any sort of advice from an accountant, you have to read between the lines. You have to sort of, and I'll tell you when I'm not on air how you do that. But so just understand that they're intimately related to the government. They're not as free as you think that they are. I paid my accountant to give me this great advice. No, he's also a tax agent. So just be careful about what you're looking for from your accountant. You're not always going to get what you want from them. Highly qualified members of peak body, usually the CA or CPA. They're both very highly respected. The chartered accountants reckon they're one above the CPAs. That's my son, he's a chartered accountant, and he'll tell you that they're way above the CPAs. But in general, if you look at any ads, it's always either CA or CPA. So it looks like there's no difference in the industry point of view. So I'll just see if yeah. So we'll stop here and then I'll get stuck into the other part. So when you're looking at a bookkeeper as opposed to an accountant, they're the two that we look at. I want to put to you a third proposition where we become the bookkeepers. And I know you all want to say, but what do I know about accounting and bookkeeping? Well, with the new tools that we've got in things like MyOb and QuickBooks and things like that, we can actually do that bookkeeping function. And there's massive advantages, not just in saving money, but there's massive advantages in managing your business well if you keep your own book. So we'll talk about that after the break. So let's have